Hey, welcome back to Two Stupid Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're going to talk about a red alert for inflation. We're going to get towards the end of this video, but I want to talk about leading up to that some of the Fed governor comments from recent interviews about why this may matter and what it really shows. Get to it.
Two Stupid Guys Trade Stocks.
All right. So, you remember this dot plot thing here? You and I did a video about this when the most recent summary of economic projections came out a few weeks ago.
Yeah, how there's one crazy guy who's way up top. Yes.
Yeah, yeah. You know what's interesting about now that we're kind of in kind of in the time of the month where we get into these interviews from all these Fed governors and they go out and do all their speeches, we're getting a little bit more of a insight into individually what their thought processes. And now there's like a couple of governors that almost seem like they could be this voting member, which is why I want to talk about these
Okay.
interviews in the last few days. Now, this is based upon that, this is what the actual federal board governors put out every 3 months. This is basically from the CME watch tool. It's Chicago Mercantile Exchange. This is where the betting is as far as what the interest rates can look like for the federal funds rate over the next year and a half or whatever. So you're right now we're still looking at these three cuts through the end of this year, according to this, and the SEP matched that. However, we're seeing interviews like this come out. Fed Governor Bowman says additional rate hike could even be needed if inflation stays high. Have you heard about this
Okay.
one yet?
So he's got to be my pick for the one guy that's way up because he's the only one still talking about hikes.
It's she, actually. This is a Michelle Bowman,
Oh, my
is,
bad.
is her
Oh,
full name. But
I just saw it. That's Jeff Cox. My bad. I just
yeah,
saw the
now
picture.
it's all good. But basically, what she's trying to say here is that that's not her base case, but she does see it as a possibility. And as more and more data has come out, the likelihood of that possibility has become larger and larger in her point of view. All right. She said right here, while it is not my baseline outlook, I continue to see the risk that a future meeting we may need to increase the policy rate further should progress on inflation stall or even reverse. Pretty crazy, huh?
So I would like her to give some parameters to that because one, it I mean it usually does reverse a little bit, right? There's a double peak, which we've already witnessed. So
Yeah.
what's her threshold other than just like I'm feeling a rate hike? Like I need
Yeah.
a little bit
No.
more than that.
Yeah. Yeah. Fair enough. So one of the indicators, like I said, that's the thing we're going to literally talk about at the end of the video here. But it will eventually become appropriate to lower. She does agree. Yet we still may not be at that point.
I agree.
I continue to see a number of upside risks to inflation. That's really where they're getting this language from. In a couple of the Fed governor interviews here, is that it seems like now there's more things that they can see as pushing inflation back up than they are looking at kind of like having a downward spiral where all of a sudden it drops significantly. They're seeing more risk that it can tries to be sticky and stays higher.
Fair. And we still do they have done a decent amount of quantitative easing, but we still have a ways to go on that. So there's still other things they can do here.
Oh, you mean like the offloading their balance sheet, the
Yeah.
quantitative tightening? Yeah,
Yeah,
yeah.
I said
Well,
easing. My bad.
yeah, it's all good. $75
Opposite.
billion per month. Yep. So the other one is this Raphael Bostic. We're going to talk about his interview here in a second. And then they had this Neil Kashkari who said that maybe no cuts if they don't see inflation decline further. So like that's three different Fed governors. We're going to talk about the Bostic interview here too. So Atlanta Fed President Bostic sees only one rate cut this year, and it won't happen until the fourth quarter. Is his prediction.
I
All right.
think that is much more plausible than a rate hike. I actually think that that could happen. I know that you showed
Absolutely.
the chart earlier. I don't think we will get a rate hike. Sorry. Oh boy, I didn't sleep
Cut.
at all. Two kids. A rate decrease until at the latest July, and even then, I'm still feeling later, to be honest.
By latest, you meant earliest. I love it.
I have a
Listen,
1 month old. I should put that out there, and a 13-month old. It's
that's
rough.
perfect. Uh, I absolutely love it. I'm here to interpret for baby daddy Dylan here. But yeah, we all get what he's trying to say here is that, it's becoming even less kind of certain that we're going to see these rate cuts. As time progresses here, it's become less and less of a given. if you will, that we're pushing the rate cuts now further and further this year. I remember one point I thought our first one would be in March. Now we're looking at like maybe fourth quarter of this year is the expectation. Yeah, man,
I,
I know,
I
I get
called
it.
bullshit on that, if you remember that. I said, no way
Yeah,
in hell.
forever the optimist, I guess. Inappropriately so. Well, you just have to see more data come in. That's what they're waiting for month to month is what they're trying to
Yeah.
say here. All right. Road is going to be bumpy. We've already seen that very consistently. It hasn't moved down in a relatively straight line. And there are some secondary measures in the inflation numbers that have gotten me a bit concerned that things may be moving even slower or even in the wrong direction. Okay, some good components in the inflation metrics that the Fed uses that show a high proportion moving above 3% and some even above 5%. Yeah, you heard this?
Okay. Um, I guess my question to that would be, remember when we did a video where we looked at various companies showing, is this inflation or is this corporate greed? Because
Mm-hmm.
that does affect. We had come to a conclusion. It was actually probably one of my favorite videos. We came to a conclusion that they were various companies that were
Mm-hmm.
essentially having record profits and
Yeah.
record revenue that had nothing to do with inflation, but it's in the
Yep.
guise of inflation.
Exactly. Prices are sticky, right? Like I remember them talking about. I think it was a diaper company, which is right in your avenue right now. But I want to say it was like Pampers or something talking about how when cellulose prices went through the roof, they had to raise prices of the diapers, of course, to be able to pay for this higher price cellulose. But now as cellulose prices kind of collapsed since then, they've kept the diaper prices high. That's why companies like Kimberly Clark are reporting like record profit margins.
Yeah.
That was the real
So
difference. Is there were haves and have-nots amongst corporations.
is that inflation or is that people being dicks? Because there's
It's
definitely a lot of that.
still inflation from consumer perspective. All this is based upon consumer pricing. So this that Raphael Bostic we were just talking about, where he was saying like some of the metrics are even moving the wrong direction. You're looking at this is put up by the Atlanta Federal Reserve. All right, this is a conglomeration of multiple different inflation measurements that they use. Right, so if you're looking at PCE, which Powell's talked about being his favorite one, that's right here. And you see 2.8% on core and headline 2.7. But if you look at this entire column here, those are the lowest numbers on this entire column. Every other inflation metric is above that and above 3% in point of fact. Pretty crazy, huh?
I don't know what the FRB San Francisco cyclical core PC is, but 5 is
Yeah.
pretty high.
This is new to me. That this is the first time I've encountered this was reading about his comments and then reading about this kind of conglomeration board that they use at the Atlanta Federal Reserve for inflation measurement. Obviously, PCE and CPI are things that I've looked at all the time, but this is introducing new metrics, and all of them are higher than the PCE, which, like I said, is the Federal Reserve's kind of preferred metric. But this has given you certainly a little pause, I would take, from this in terms of now you're looking at the Federal Reserve being much more cautious. That's where this is coming from, where we're seeing the inflation sticking around a little bit longer, and that they're not willing to move and cut rates. Federal Powell just asked an interview a couple days ago, talking about how basically about a Taylor rule, which is another economist, that the federal funds rate should be around 4% right now, but they're at 5.25 to 5.5. Right, they're like 1.5% above where it needs to be by this Taylor rule, which is designed to have the appropriate Fed funds rate for the economic conditions. And Powell was like, yeah, we understand that, we're sticking to it because we're seeing signs that are a little bit more worrisome, and we don't want to feed into that and make it worse.
Yeah,
So,
well, the last thing you want to do, you'd much rather, I guess it depends on who you're asking, but you'd much rather cut later than too early. Because if you do it too early, you're kind of screwed there's
mhm,
lasting consequences that could go upwards of a decade here. So, not
exactly.
ideal.
You end up with even worse multi-spike like inflation cycle where now they have to use alternative means and much more aggressive means in order to control inflation if that happens. So they're trying to stay away from that.
Yeah. All right. Well, let us know what you think. And if you want to count how many times I misspoke and put it in a comment, that'd be great. Because, yeah. All right, guys. Bye.